Hey everyone, me Kevin here. Boy oh boy, Elon Musk gave us a whole bill of hopium today, and I'll tell you, I like hopium. The path for Tesla has been written, at least per Elon Musk, that with a little bit of luck, maybe a lot of luck and a lot of hard work, Tesla, per Elon Musk, could potentially be worth twice the value of Saudi Aramco. That would be over $4 trillion in future value, potentially. Now, Elon also says that another way. Tesla could be worth as much as Apple and Saudi Aramco are worth today combined. Also over $4 trillion. That's about 5.7x the stock price today, which would be over $1,000, which Elon Musk thinks is possible per share for Tesla. Now, of course, hey, that's hopium. But he even added to that. About 50 minutes into the call, Elon Musk mic drops, because here I am thinking, sure, I mean, if Robotaxi takes off, all the cars, the semi-trucks, the energy, and robots take off, sure, $1,000 a share, fine. But then, about 50 minutes into the call, he mic drops and says, oh, by the way, that's without Optimus, $4 trillion. Wow. Okay, a lot of hope right out of the gate. So we're kind of going to do this video from like the happiest part to the worst parts. So the next happy part, the potential for a $5 to $10 billion buyback of Tesla shares probably next year. That's because they're keeping this cash reserve to make sure if in their scenario of a nasty 2023 recession, they can still survive, which they believe that even in a nasty scenario or recession, they'll still be able to produce operating cash flow in a 2023 nasty recession, which is amazing if they can, and obviously we don't want to go through a nasty recession, but we want them to be prepared for that and have a cash buffer. That actually is interesting, because if we don't have a nasty recession in 2023 and things start turning up, that means the stock market will probably start going up, and Tesla stock will probably start going up right at the same time Tesla says, oh, now let's do our buyback, and you could just literally take jet fuel and pour it onto Tesla stock once it starts going up, potentially next year. So you got lots of time to buy the dip between now and then, unfortunately. Or maybe fortunately. Anyway, they did have a 4% reduction in G&A costs this quarter, which is actually good. This is part of the layoffs that they had in white-collar workers. They still grew revenue in sort of their top-line deliveries at a 50% clip while reducing G&A by 4%. Elon Musk says we'll have an epic Q4. However, there is a little bit of reading into that you had to do regarding their 50% annual compounded growth rate. For their 50% annual compounded growth rate, they believe that in future years, probably 24, 25, and 26, they're actually going to average more than a 50% growth rate. In fact, at the beginning of this year, Elon Musk was talking about maybe even a 60% compounded annual growth rate. But that went away. There's no more comment about 60%. Now it's like, we hope to average 50%. To me, this kind of sounds like the Federal Reserve when they're like, we hope to average 2% inflation. In other words, it's probably going to run hot, or inflation's going to run hot for a while, and for Tesla's purposes, it probably means we're going to miss 50% for a few quarters going forward, especially since Tesla's projecting that 2023 could be rough as they get through some of these recessionary challenges and remaining commodity and supply chain crises. And that's obviously where we had a big miss today. Margin. Margin just didn't come in as well as we expected. We expected it to come in at about 28.4%. It actually came in, hold on, let me fact check that number really quick. We had a margin, I have it written down right here. Yeah, 28.4% was the expectation. It came in at 27.9%. Unfortunately, coming out of Shanghai or Shanghai last quarter, with Shanghai being shut down so much, we actually saw margin stay stable with Shanghai's quarter this quarter, and we missed expectations, despite the fact that Shanghai reopened up. That's a problem. Now, part of that is because Tesla is arguing that, hey, we're still seeing the pain of peak commodity prices. And they say that even though commodity prices are falling for things like steel and aluminum, being down somewhere around 17 to 20%, and even though shipping costs are down from $20,000 a container to like $3,500 to $3,600, they're not seeing commodities deflation in lithium and battery products. They're also, remember, companies like Tesla, they lock in these costs into their supply chains and into contracts for a while. So they're only now, what they believe is just now hitting peak commodity prices. And they expect maybe they'll see 10% of their costs come down in Q4, but not some kind of windfall. So they're like, don't expect to see our costs come down a lot next quarter. maybe in 2023. And Elon Musk is like, yeah, probably 2023. In fact, it would be a surprise if costs didn't come down in 2023. Some other hope here, excuse me, was this comment on the potential for that Model 2 to be a smaller car and potentially in the future half the cost of a Model 3 and Y. And they're going to take everything that they've learned from making the Model S, the 3, the X, the Y, the Cybertruck, and the Semi, and hopefully make a car for half the cost with half of the factory space. And they think all of this can be done at some point in the future. Obviously, again, that's just more hopium. So kind of back to reality. Q4 numbers, operating margin did breach 17%. However, we hit 19% in Q1, so we kind of fell back down a little bit. Free cash flow of over $3 billion, 3.2 to be exact, expecting an annual free cash flow of over $9 billion. This is remarkable, and Tesla bulls are going to talk about that all day long, but let's be real, that's already priced in, and really what moves Tesla stock is growth projections. And the fact that we went from, hey, maybe we'll have 60% annual compounded growth to, we'll average 50%, and we're probably going to miss in Q4, even though we're excited about Q4, kind of is leaving the stock down 4.7%. Elon does believe it's foolish to buy a gas vehicle because the residual value of those will go down to zero. Full self-driving is expecting a wider release in Q4, likely next month, and it will also be immediately available when you buy a new car. So far, Tesla has about 3.5 million vehicles on the road, a fraction of even 1% of the global fleet of over 2 billion vehicles on the road. Elon believes that energy storage could see a 150 to 200% growth rate in the future, but the problem with that is not a lot of margin there. Semi gets delivered. The first Semi gets delivered to Pepsi December 1st. Margin on energy, by the way, is like 9.5%, so relatively low. Again, they believe their spending on R&D, which is up about 19% year over year, is actually goes a lot further than any of our competition outside of Tesla. Factory ramping, Q3 hit record numbers. Berlin up to 2,000 vehicles a week. Giga Austin should reach that soon. That means Berlin is actually ahead of Austin. They tripled their 4680 cell production from the prior quarter, and growth is rapidly growing, production is rapidly growing, which is great. Still transit problems though, not enough ships to get vehicles out of China because less Chinese are buying vehicles, so you got to ship them out. But there just aren't enough ships and trains to actually get these vehicles out. And so you have logistical issues bringing margins down, and then obviously supply cost issues bringing margins down. Supply chain risks could lead to a miss on that 50% growth rate. That's obviously a problem, and Elon Musk does expect that we'll meet all the thresholds to basically take full advantage of the Inflation Reduction Act. And so one of the big things that I'm seeing here is if you're a Tesla investor, you have to look at Tesla as, okay, we're probably going to go through not another quarter of hell, but like another year of hell. That's because maybe in a year from now, inflation will finally start meaningfully coming down. Not only will inflation meaningfully start coming down, but maybe rates will start coming down. Then the supply chain issues and shipping issues will be gone, and then the commodity cost issues will be gone. And then we can pour jet fuel on Tesla stock. But until then, you gotta wait. It's going to be a bumpy ride until then. Honestly, I don't think we're going to see 50% annual compounded growth rates for the next few quarters. To me, what I'm hearing here is we're going to have a bumpy Q4. We're going to probably have a bumpy Q1. Q1's always worse than Q4, so if Q4 is going to be bumpy, Q1's probably going to be bumpy. You're still ramping. And so unfortunately, you've got more hardship ahead rather than just easiness. However, the expectations are that if you're a long-term investor, hey, you know what? This hardship is just an opportunity to be part of something that could potentially in the future be worth 2.5 times what it's worth now, which would be, say, somewhere around $500 a share, $550 a share, and maybe even double that if Elon's optimistic projections are right. So in other words, if you take Elon's optimistic projections, water them down by 50%, you're still at $500, right? So they do believe that margin will return to that 30% level. And if you take out FX and some of the commodity issues, they believe exactly that is possible. But realistically, the issues, like from what I'm hearing, I'm not hearing that we have any issues that are short-term. Everything to me sounds like a long-term issue, long-term pain, more pain to come. And unfortunately, we've got to buckle up. And buckle up just means strap in, hold tight. And if you're a long-term buyer, buy and hodl. If you're trading, yeah, you're probably just making money shorting it. Personally, I'm optimistic. I don't see anything here that's the red flag. My biggest red flags were margin, and honestly, the fact that they told me they're still not past peak margin, or past peak, or maybe just now past peak commodity prices, made a lot of sense to me. It actually gave me confidence that, okay, that makes sense. Like Q3 was still experiencing increasing costs, not decreasing costs. Because a lot of us went into this quarterly report thinking, oh, well, costs came down, right? No. Okay, well, that's good clarity. Confidence on sales. Look, I do expect they're going to sell all their vehicles, and that was reiterated today. They didn't reiterate it as hardcore as they previously had, but they still expect to sell all their vehicles, and even Wall Street expects they're going to sell all their vehicles through the end of 2023. I think now it's just a matter of how bad is the recession going to be. So, folks, there you have it. Bullish, but enjoy the opportunity to buy the dip. Thanks for being here, folks, and we'll see you in the next one. Goodbye.